morning, everyone. We are doing pre-London Open analysis. So now what we are going to look at is what is going on in our markets. I'm going to do market recap later on today. So I'm going to go through trades of yesterday that could have been potentially taken and lessons that could have been learned from those trades. So looking at 4H and just higher time frame in general, not much has changed. So the analysis that we had from before, they kind of stand the same, you know, when you look at the weekly, when you look at the daily, everything is kind of the same. One thing that changed is the new monthly candle is open. So this candle here was still closed below last month's low. Now, not by much, literally by 89 pips on that on monthly candle. That is not a lot, but you know, we did close below, and that is kind of showing us that over that period we had over August weakness in euro as well as on the previous month. But the previous month's drop obviously was a lot more. It was a drop of 350 pips, and here we only have a close drop of 87 pips. So that's the only difference that is happening right now. Now, in terms of weekly, we are still kind of sitting within the range of last week's high and low, and we are kind of not touching either the highs or the lows. We literally have not tapped into the highs here or the lows here. We're sitting somewhere in between, and the price is consistently just moving in between those two price points. In terms of daily, we did close above previous day's candles. So we had actually an increase in price, but we know that this is the swing on lower time frame, and that swing hasn't been untouched. Price arrived to certain areas, but at the moment that swing hasn't been touched. Now, you know that, you know, on daily we have a break of structure, and we have swing high, swing low, and potentially internally swing, and also a swing as well. So we kind of at the moment have price pulling back a little bit into the premium area. Now on 4H, we are seeing that price eventually returned into the supply. We know, so on daily, obviously those swings here, that swing here is this 4H, and then we have one here. Now, if we just took into consideration this kind of high and low, then we would see that generally speaking, we have inefficient price action here, and well, order flow, the price never pulled back into the premium of this leg. Therefore, we have a few good areas where the price may react to, but obviously that is to be broken down in more detail once we get closer to that. And then we obviously also have this swing high, which is right there on the 4H, and this is the swing low, the lowest price. And now the price did tap into the premium. Okay, we tapped into the premium again because we did obviously with this swing as well. So on 4H we are in premium, and we are kind of, you know, reacting to that nearest 50% mark in the premium, which we did here initially. And now it could be that the price will take this high out and continue up here, or this actually will hold. One thing to consider is we do have a lot of liquidity there. Now, this is liquidity that we already highlighted previously, but also, of course, this is now also liquidity sitting there. Now, it could be that the price will be protecting those highs, but it is quite clear that, you know, it is a liquidity in the market, and therefore the price, even if it's going to hold from around this supply, it still might be that it first is going to be swept, which is also previous week's highest price, is going to be swept, and then price may move to the downside. Now, everything on higher time frame looks like bullish, you know, like the traders who are following the current momentum, they'll be like, look, we've got a higher low, we have closed here, blah, blah, blah. Potentially price may move to the upside, but I think this is stack of liquidity. We potentially will experience that accumulation, then we are going to experience potentially inducement and then actual move in the market. Of course, we have to take it all kind of step by step because we don't know when those things are going to happen. I'm going to just move this a little bit to here. Now, of course, the price may want to come back into our extreme premium, and now it already wants tapped this supply. Technically, when it comes to price moving, we would want the price to continue moving down. Obviously, it hasn't tapped back into a supply, did not sweep anything, but price is kind of stuck in between. Again, if this was 1 minute time frame, you'd be waiting for a level kind of thing. But we are on 4H, so we kind of have to observe what is going on in terms of everything else. Now, before I jump into kind of looking on 15 minutes and breaking everything down, I just kind of want to highlight the usual, which is going to be our previous day's highest price, our previous day's lowest price, previous week's highest price, and previous week's lowest price will kind of stay the same for me. This 1H mitigation at the moment I'm going to delete. So the only 3 things at the moment that I want to add is today's open. And today's open is also monthly candle open. So this is daily opening price. And of course, I want to also highlight to myself the highest price EUR/USD was trading at yesterday, and see if we are going to respect that high or whether we are going to potentially take that high out. And then we also have daily candle low, which is the lowest price of EUR/USD yesterday, which now when you look at 15 minutes, it aligns with yesterday's London session lows as well. And this could be something, to look out for. Now, again, we are literally sitting within this range the whole week. Everything that has happened happened in between. Now, what happened here? We were we were reacting to a supply that was left with orders, and we have been building trading ideas from it over the day before yesterday, which was Tuesday, and we were trading those trading ideas. Yesterday, I think, no, it wasn't yesterday. Yes, it was. Yesterday, price still held it. It still kind of had given us areas in the market, gave us change of character. It kind of moved to the downside. That move here was so beautiful over the London session, and then from here as well, creating London highs. This was Frankfurt, actually. This was the London highs. This was so beautiful, and then price moving down. We did remember we had all this liquidity from here, and what the price did, it did not just break the structure, it actually grabbed liquidity to move the price to the upside. So now look at the market structure internally. When the price taps here into supply, we wanted that supply to kind of start building a story, and for this high to take these internal lows out. It didn't. It reacted to a demand, then price moved in between, tapped into a supply again. Then finally we took not only the internal, but also we took these lows out as well. So here the lowest point in the market was there. So we did break the structure to the downside here. Okay, so because we did, internally this became our swing, and then this was a reason why we thought, well, potentially the price may want to continue. However, we still knew that this supply has open orders that were left behind, and the price may actually want to address that before moving down any further. So we had that break. This became our swing. Then on that swing, we could have overall kind of giving ourselves swing low, swing high, and then above in premium. This was the first area in the market, and this is precisely where price reacted to as well. Reacted really nicely, and near London highs, within London highs were eventually taken out, and eventually that swing had been taken out as well. So now we also had a break of structure to the upside internally. So that break of structure now took this swing away from us, and then we have the swing low internally, because we are working between those big swings that are sitting here. Okay, now what did this price react to? So let's establish that the price reacted to this demand here. Okay, these demands over there, they were filled with liquidity. We already know that because we highlighted that to ourselves a few days back. So I can delete this, and we had this XX, which means liquidity. And we were like, all right, okay, cool. This is where the liquidity is sitting, and price grabbed it. As he grabbed it, it came back into this failed reaction. So there was a supply here. Price failed the sellers failed to take control from that supply and then broke this high out. Therefore, this is a failed reaction order block. And to that failed reaction order block, we had price come back into, and I'm gonna delete this at the moment because it's no longer relevant. Price came back and tapped into the lowest price somewhere here on 1 minute, and then it had given us a change of character. So we had break to the downside, break to the upside. So we had a change of character to the upside of that demand. Okay, so we have change of character up. Now, of course, after the change of character, the price will create a new demand because that demand caused the change of character. And we can see that price returned into some type of 1 minute area. It mitigated with 15 minutes too. It came back into the demand, picked up more orders, traveled back to the supply, reacted of the supply. Obviously, we can see that the order flow was quite strong. Now, looking at, obviously, swing and swing, this would be our swing low internally, and this would be our swing high. Let me use the other one. This is our, and I'm going to put it on the side here, okay? This is our swing low, and this is our swing high. Now, what are we looking at? We are looking for the price to come back into a discounted area, and in a discounted area, we are looking at the nearest order block. In a discounted area, we can see that the nearest order block is here in terms of a demand. It seems like everything else on the demand did mitigate in terms of order flow. So internally, we had break of the high, price came back, mitigated with the discount, broke the high again, mitigate, and then as we broke here, price came back, mitigated with discount, broke the high again. So, price is back into a discounted area, and an area that could potentially hold. Potentially on 1 minute, we do have areas here that are unmitigated 100%. Now, although we did that, it wouldn't be a problem, and it would be quite clear where we are going in terms of our bias, but we have tapped into a supply that is at our swing high. Now, again, those are our overall structures. This is our internal structure, and everything in between is a substructure. So our overall swing high and swing low, we are still seeing clearly that this swing is in charge. This supply is in charge of overall price action, and because can you hear me now? Yeah, okay. The AirPods stole my microphone. They do that sometimes. So I just forgot to turn off Bluetooth. Anyway, so what I was saying was that, I hope you heard that we are sitting within this swing high, swing low. And because of the market's conditions, we are trading everything in between, and we are trying to work out what is going on in between, in between our swing high, swing low, internally, and in terms of substructure as well. Now, what I was saying is that if, we had this break of structure to the upside and we did not tap into a supply, then the bias is clear. We are buying. We are buying until we tap into, for example, this big supply. However, this is a swing high. This supply is responsible for the move down. It is still protected. Price is potentially building up to eventually take it out because it is above the previous week's highest price, because we do have liquidity here. So the price may be targeting it, but at the moment we tapped into it, and I can see this wick. Can you see this wick here? This is the wick that we exactly tapped into.
Okay, and we tapped into that wick, and of course above here on 1 minute we identified, so I can delete one of them, I have to for some reason, we identified that we have some extremes on 1 minute that are part of this swing high that the price could come back into. As much as price came back into this wick here, supply, and as long as that is a tap into our supply area that is protected, at the same time though, it did create more liquidity, and here we have equal highs. So I'm kind of thinking that even though we might be sell bias overall, before we are, the price potentially may want to sweep all of this liquidity before price actually drops. So yes, this is our swing. Yes, overall we are sell bias in terms of monthly, weekly, daily, 4H, 15 minutes. But that is when it comes to swing structures. Everything in between is kind of change the direction. And also we are recognizing that we have, well, now we have also here liquidity sitting. We also have liquidity sitting above the previous week's highest price. So I'm kind of thinking before we drop, we may want to sweep this, or we may even want to come back there. If we don't want to come back there, that's absolutely fine. We don't have to. And we know that we may just want to sweep all of this liquidity, because remember, there will be a lot of liquidity here. There will be a lot of liquidity here. There will be a lot of liquidity here. And there will be a lot of sellers sitting there, a lot of stop losses, and a lot of people will want to sell from there when the price arrives there. So it is something to consider. So we tapped into a supply, and obviously because we tapped into a supply, I am wary that we have tapped into it, and now the supply could take control. However, considering that we do have 7:30, so the Swiss franc has CPI. Swiss franc is crazy. It may actually affect all of the markets, and Swiss franc, when it drops, is just like nothing you have seen before. It's a crazy pair. And we also have data coming out at 1:30 orange folder and 3 p.m. as well. We have still a week filled with a lot of data release. So even though it's September and we are happy about it, it's a non-farm payroll week, so it will affect the markets. I think all of this is in preparation of the big data release, because remember that they will want to get in at the best prices, and in the meantime they will have to create a lot of liquidity. So even though we tapped into a supply, and I cannot ignore that fact, because after the tap into a supply, we have a change of character down. Obviously, this is the supply that created the change of character down. So I am wary of it. However, again, liquidity. Is it going to be grabbed today? Is it going to be grabbed tomorrow? I do not know, but I reckon at some point this week, it is going to be grabbed, unless the price will completely change the direction, which is absolutely fine. Do it. If you want to change the direction, change the direction. Now, one thing I want to highlight here is if this doesn't hold, then we're not going to look, maybe we can buy from here, maybe we can buy from here. No, absolutely not. Then that means the supply took control. And obviously, at the moment, this is our swing. So we do want eventually this swing to go. And I reckon at these extremes somewhere, we have on 1 minute unmitigated areas. Everything in between on 15 minutes is mitigated. We had efficient order flow to the upside, and I would be not interested. All of this is liquidity. It's closed. There are no orders there. Everything that we're going to see here is going to be potentially an inducement. So I don't want to look at that. Now, this is the today's open. Let's look at the Asia session highs and lows. At the moment, we haven't touched Asia's session high. So Asia's session high is when we opened the price at the Asia session, price just dropped. Asia's session low, we took them now. So we swept Asia's session lows already. We know that. We know that London lows from yesterday are untouched, and those are New York highs from yesterday. So those New York highs, again, could be something that the price may want to sweep. And again, when the price will be sweeping, it may not sweep straight away everything. It may first sweep New York highs, come back lower, then may sweep a little bit of previous week's high, come back lower, then it's going to actually do the actual sweep, and then we're going to see a drop. There might be a lot of up and down movement in between, and we have to obviously consider that. So I know we tapped into a supply. Now, when we are looking at the internal, at the substructure on our internal legs, we have push down here, price came back and it did mitigate. Therefore, we've got efficient order flow. Then price created this high, dropped again, then it dropped again. And then we have inefficient price action because the order flow rather, because price did not pull back to our premium. Then price from the highest point broke the structure, internal structure again. And then now potentially it may want to try to regain its efficiency, but if it doesn't, then I am expecting for these to be taken out, for these really to be taken out. I would not sell from here. I would want to, although one thing though, there will be some reaction there, but not to say that this is going to hold because we do have orders left there. You know, they did break the internal structure, etc., etc. But obviously, as we have built the story of everything else, at the moment, we want to see if the demand is going to hold and if we can buy back into the supply, or if this supply at the moment had taken control and it is going to move to the downside. Now, on 1 minute, if this demand is not going to hold, let's prepare for the demand down low at the bottom to understand what happened in terms of the order flow. So what we can see here, that internally, you know, we would have to look at price breaking. I would say, to be honest, this was the swing that actually finished breaking here. It wasn't from there. This broke this. You know, this is the whole leg. So then we need to wait for this internally to be taken out. And as we can see, we did, so this is the 50%, this is the discounted area. And as you can see, we had price not come back at all. It came back here and grabbed this liquidity from there. And what did it do? It created equal lows. Therefore, this is all stacked up with liquidity. We're not touching it. We are not touching it. Even if you get a chock or whatever, don't touch it. Only wait for the order flow to develop from there. If it doesn't, don't touch it. So then on this swing low, no. Wait a second. Then this was our swing then. Okay, this was our internal swing, low and high. Okay, so we're waiting for the break of structure of this. So then what did the break the structure from it? So this is the leg that started breaking it. And then we actually took it out here. All right, that changes everything. Okay, that changes everything. So what we can see is that actually this took our swing, internal swing high out, and then price. So this is, I need to just move them. So this is our swing low and our swing high. And we can see that price actually grabbed from premium orders. And this was obviously the nearest order block to the discounted area, not premium, from the discounted area. And what we have left below is this and this. So now we can look even at more internal stuff, just like, you know, to understand what is going on. So we can see that price went up, broke. There is not breaks. It's just measuring what happened on the leg. I would say that this is something. And then we came back, we broke, came back. There might be some orders here. And this may actually, you know, give us something, because up until that point, even if we look at this to this, price did come back to the discounted area of just measuring what is going on. That is it. But I see this as a little bit of unmitigated area, to be fair. And I reckon that this is where the price could come back to into, you know, in our demand. Now, we also have previous day's lowest price that we drew out from daily, and we have London lows from yesterday. And, you know, this is going to all go into PDF. So now I'm back home Thursday. I'll be working all weekend again, and I will be just grafting, because this September is going to be big. It's going to be a big month, never mind the rest of the month. But when it comes to extremes like previous days lows, not weekly, previous days lows or highs, I will always now wait for a sweep first. So unless we have like order flow there that is protecting those highs and lows, and we like, you know, you shouldn't be swept. It shouldn't be swept because we have like, you know, order flow built up on 4H, and just this daily high should not be swept. But generally speaking, daily highs and lows are swept, are getting swept all the time. So if I'm going to take my trades from extreme, because that's how I take my trades from those extreme, it's one of my entry models, then I would first wait for the sweep, then for a chalk, and then buy or sell. Okay, so that is kind of my plan. Now, obviously, if from near here we are going to get good entry model, I may enter, but I may be like, damn, we are near previous day's lowest price. But because we are heading towards end of the week and we have a lot of news, I may just go for it anyway, you know? Again, probabilities, not overthinking, oh, I'm too scared, there's liquidity. Just allow for those probabilities to play in your favor, or, you know, and work themselves out. Now, looking at things internally, we can see that this low took this high out, and then price did came back, and we had efficient order flow. Then that picked up orders and swept these lows, addressed some imbalance there, I can see. And then this low, where did the break happen? The break happened here. So then we had from this low, we had the break here. So this is all done now. So I don't need it, because if it's already efficient, you don't need it on your charts anymore. You can delete it and say, well, we have efficient price action. I don't need it on my charts, because otherwise it's just going to be confusing. So here, this is all gone. I don't need this on my charts anymore. And I only know that I have, for example, these areas here that are potentially open for business with, you know, orders sitting there. Now, here from this low, we took this high. This is where the push finished, and we can see that we have inefficient price action, and then price continued moving up. Again, it did not pull back to 50%. So, or did it? Broke, it kind of did. It regained its efficiency, but then we had a chalk because we hit the supply, etc., etc. So I can see that now we have overlap of 1 minute and 15 minutes sitting together. I can see that we mitigated this. I can see that this area is potentially unmitigated. I can see that we have an order block here, which is also a failed reaction. So we have failed reaction here where supply failed to take those lows out. Now, it's not a very strong failed reaction because there was not a lot of interaction there. The stronger the failed reaction is of course, one thing, if this low, if this supply took the low previously and then price came back to it, it would have been a stronger flip, because then we would be like, oh, this supply was very strong, it took overall lows. But what it did, it only did a change of character. So it wasn't the strongest. And I think it was a 1H mitigation as well. And then also another thing that's going to help us establish the strength of the failed reaction is if we have a lot of interaction at the failed reaction, and then finally, boom, that means that this failed reaction is good because it was filled with a lot of selling orders, and that means it required a lot of buying orders to slash through it, and therefore then when price comes back into your failed reaction OB, that means it's stacked with a lot of orders. So price could come back into this wicks and we could see some kind of reaction there. But to be fair, I would be looking more at the extreme, and I can see that we have unmitigated order block down here. Yeah, we have something here as well, but I would rather to go with this extreme. But do you know what? I'm not going to dismiss it. I'm still going to highlight it and say, hey, you are here, but I'm more bothered about this. You know, obviously price may react there. That's fine. But this failed reaction is not that strong, so I don't think is that good. Now I'm going to leave that on because I know what I am looking for. So now looking at where the price is, we can see that actually we are not yet reacting to any of our extremes. We can see that we had very little reaction from this order block, and we had the sweep, so we can delete it now. It's not relevant. So that failed reaction was not strong at all, like I said. Now here, have we addressed the imbalance? So all of this was imbalanced. The rest of the price seems balanced, actually. We do have this as well of the swing low, which kind of overlaps. So I don't know, but we addressed all of the imbalance, and from addressing all of that imbalance, we have now, let's see. So let's just think, this actually took this lows out, not this. So I would say this is where the push finished. Then the price was inefficient, continued moving down. Finally, we're reacting to areas. So again, see nearest area to the premium or discount, and then price is reacting to that at the moment. And now we will see if from this reaction, the price will continue taking the lows out, or if this demand will actually sustain. And this is just a reaction internally. So what the price could do, it could react, do something, come back into these extremes, and then actually go to the upside. So we will be observing what the price is doing in this demand. At the moment, we are seeing some reactions. We also know that we potentially have some other orders there. Now, I don't want to sell from here. I'm just highlighting the areas. Positive Swiss franc news. Okay. So I wonder, just out of curiosity, what does euro and Swiss franc look like? Euro. One day only. So that is euro's actually stronger. Let's refresh. 0.3, yeah. So we have positive news for Swiss franc, and even though it's positive, euro at the moment is reacting to some kind of order block. And euro is actually saying, well, even though you are stronger, I'm stronger than you, which is interesting. And overall, we can see that euro actually has been in an uptrend against Swiss franc. And now the price is, I wonder what it's reacting to. Weekly, daily. So we are sitting in a daily demand, 4H. That is interesting. So also it was 4H mitigation that the price reacted to. So it's interesting. So euro, or it was just a reaction and price will continue down. Otherwise, it's positive for euro in some way. So it could be that this demand is going to hold now. And that kind of could give us some extra confluence. Now, this was the last move down. I would still wait. I would not buy straight from here yet. I want to see what the price is going to do at the London Open. So do you understand where we're going with this analysis? Again, we are stuck between two price points, and we are trying our best to understand what the hell is going on. You know, like we don't have an easy job right now. You know, price now, I just want to highlight another thing is from this low, high, what's this, everything in between? Let me delete this. This low took these out. There. And internally, this is mitigated. This, okay. Internally, we also have this and this, because obviously if we take into consideration on substructure, this low to made this high, then we fully mitigated, then we went up, and then we have not mitigated into the discounted area, then therefore the price is inefficient, the order flow. Then we have an area down here below that the price may wanna react to, somewhere like that. And then we obviously have this extreme as well. So it could be still that the price actually is going to first head for these. I mean, again, we swept all of the liquidity, but at the same time, we created more liquidity with equal lows here as well. So it's not quite kind of equal lows, to be fair, but there is liquidity there. We have imbalance. Eventually, we will take it out. And I think during news or something like that. At the moment, we could be still continue up before going down. So a part of me is buy bias until obviously I get my entry criteria, but a part of me is buy bias at the moment until we hit the supply again, maybe, because when we are looking at the internal legs, demand did take the control back internally between, again, those two swing points where the supply is in charge. And then now we may want to see price coming back into those supply levels and kind of taking the liquidity. And we came back into a discounted area of this push leg, and we could buy into it. Obviously, we need to be careful because, you know, a lot is going on, but all of this is liquidity. This is where the price could react to. This is also Asia's high. So we could sweep this and then continue down. But then I have a feeling about this area based on not a feeling, but rather analysis and, you know, knowing where the liquidity is sitting. So this is the way I'm seeing it at the moment. Any questions or anything to add? Or kind of, you know, what do you think about all of it? And yeah, you know, you know what I mean. I think there are no questions, so we are going to wait. Buy bias to the supply too. We have 50-minute change of character. Do we have a change of character? Yeah, very, very internal. We do actually. You're very good at spotting these, Carl. I'm more like, you know, I like more like I show you. I like chocks like this that are more like, oh look, there is a change of character, like that, or like this. That no, this is not a change of character. I will give you an example when I find it, like or like here that it's clean, clear. Bukal is very good at spotting those, like, oh look, the wick took this out, the wick took that out, and it's a change of character. So he's absolutely right. So I am buy bias, and I do want to buy at the moment. Yes, I do. So that's me. That's you guys as well. So we have chalk down, chalk up. Chalk up. And then out of curiosity, what did we react to then? Did we already do that, what we reacted to? So this low to this internal high 1 minute OB that we have highlighted. Have we highlighted? This is what took this. No, there. Yeah. Now back to the supply, doesn't really matter. Yeah, let's get going. Let's see what London has for us. Like, I'm so excited to be home, and yeah, let's just have a good day. It's the start of the new month. I know it's not like properly yet because it's non-farm payroll, but let's have a good day. I'll catch you on Discord now. Anna's meant to be doing analysis, but he has COVID, so he's not feeling well at all. He tested positive last night, so we will see if he's going to be well enough to do from Monday GBP USD, of, you know, let's let him recover and then we take it from there. So guys, catch you on Discord. Speak soon. Let's stay patient. Remember, think in probabilities. Take care. Bye-bye.